guys, welcome to the recap for Wednesday, August 8th, 2018. As you can see, I'm sitting in a new place. My office is in a new setting, hence the different background. Now, today I didn't do that well, and I'll go through my trades. And I didn't do a recap yesterday or Monday because I was moving and I didn't have internet set up. Was only installed this afternoon. And I did trade yesterday on LTE, on my wireless, on my iPhone's internet, all SIM, so nothing to be, too afraid of, but still not something we want to be doing going forward. So I've got hardwired internet today. We're good to go going forward. So today we had a loss of $1,027, predominantly because of two stocks. And we'll go through them. Yesterday was a similar day, but it was better, if that makes sense, but still a loss. But let me go through it. So what I'm going to be doing going forward is, rather than actually using these charts, live from my DAS, and then kind of pointing out, where I got in and whatnot, I'm going to be going back to what I used to do, which is taking screenshots and putting them in Paint, and then basically analyzing them. So for example, so this is, you can see this is WB, right? So WB was you can see it there. Actually, let me get my magic. It was a green to red move. There's the previous day's close, and I was anticipating it to drop below this. Now, I made a loss of $725 on this because of two things. One, first mistake, this had already dropped something like 6 points, which is a hell of a lot in the first 15 minutes with no pullback. And we're talking pretty big candles, right? Therefore, it was due for a pullback at some stage. That's mistake number one, getting in without there having been any sort of pullback full size. So what I should have done is taken half size, because of the fact that it was so extended, and two, there was no pullback. They're the two things I can see wrong with this trade. But having said that, in previous cases when I've done this, it's gone through the red to green, the close, and it's gone red on the day. But very good lesson if you have three really big, solid red candles, a lot of selling pressure, and it's so close to yesterday's close, to going red on the day. You can anticipate probably there's a fair bit of buyers there, but the point is either wait for a pullback or go half size or even a quarter size. That's it. Apart from that, so that's WB. The second trade was, so let me just close this first screenshot. The second was MTCH, which was okay. It was a green trade, something like $170 or something. This was good. This was your standard run-of-the-mill. This is what I'm getting better at, but not consistent enough at. You've got a really good entry just at the VWAP, so the stop loss is right there, so you're not risking too much, if at all. You've got your first target here sitting at the 20, and then 20? 9, 20, at the 50. This is a 50 SMA, and then you've got your 200 here. So your first target is the 50, right, which it reached. Didn't quite get down to the 200, but still, you covered, can't fault this. This is a good trade in the first 10-15 minutes, fine, no problems there at all. The next one, which was another bad one, was CVS. Now CVS, so what I've noticed in the last 3 or 4 days since I've gone back to SIM, or about 5, 6, 7 days, so 2 weeks, is that initially at the open there's some really good opening range breakouts, and they tend to kind of really kind of squeeze people and go up and up and up, right? Now, loss of $610 due also to 6 due to two things, two errors. One, I averaged down. So I went here 500 shares, and then I put in another 500 shares here when it was already kind of going down. Now, I'm looking at this with fresh eyes. I haven't really studied this before, right? Because I only finished trading about an hour and a half ago or 2 hours ago. What I can see now is that what I said earlier on about there being, you know, strength and kind of a lot of upward momentum. Normally, you get that on consecutive higher highs, higher lows candles. We didn't see this here. So my first mistake here would have been, you know, first of all, this is very wiki, right? This first, sorry, I know it's messy. This first 5 minute candle, this one, is very wiki, yeah? In other words, indecision. So really what I probably should have done is, well, not taken the trade because the setup wasn't there. So what I'm expecting to see is something like this, right? You see one candle, higher highs, higher lows, higher highs, higher lows. You can have one little pullback, that's fine, right? But you're expecting to see an upward momentum, right? That's what you're expecting to see on these breakouts, which I've seen in the last few days. But here now I'm looking at it. First of all, in the pre-market, you know, this is not a pullback. You know, this is pretty much almost like a sell-off, all right? And then you've got this big doji. So really what I should have done is I probably should have taken this trade. Now I'm looking at it. And if I had, once again, you know, definitely don't average down because you don't have the signal to tell you it's strong and it's going to keep going, yeah? So that's that. And the last trade, actually, yeah, there's one more and I've got it here, is MYL. Now MYL, one thing I did wrong here, two things I did wrong here. The first one is that, so I traded this twice. This is the first trade, this is the second trade. The first trade, I accidentally hit my execution button twice, which means I went in double size. That's not what I wanted to do. And conversely, when I covered, because it wasn't breaking down, I lost double the amount of money I would have lost had I not taken double size. And the second error, which is probably more serious, because you can accept hockey errors around. The second error is this, that when I shorted here below the VWAP, if it had crossed above the VWAP, like obviously this did, I should cut my losses, get out of the trade, right? I added to this 70 cents above the entry. Now, I don't recall what the ATR is. Let's have a look at what the ATR is on this. I'm just opening up Finviz, MYL. Let's have a look at it. So the ATR, there you go, 95 cents, right? So this thing on average in the last 14 days moves around $1, yeah? Let's give it $1. Which means that, let me get my pen back, which means that by adding in 70 cents above, you're almost at the limit of its day range, which means you're taking a bit of a gamble because it's way too high to be adding at that level. You know, if you're adding, you should be adding, you know, probably below here somewhere if you still have that thesis that it's going to go down. So they're the two things I did. Adding in, averaging down or averaging up in this case, at too high a point where I should have really got out. Even though this was a positive trade, I made money on this because I covered here. The point is you've got to be consistent in your process. So, you know, it's not about money at this stage, it's about the process. That's why I don't really highlight how much money I made or lost within the title of the YouTube recaps, because I don't want people to be focusing on that. I don't want to be focusing on that because at the moment it's just about getting the process, and I can certainly see things getting better. Let me show you my journal. Once again, this journal is free. If you're interested, let me know. I built this over the course of a few months. It's got a pretty nifty macro where you basically input your raw data in here from DAS or from any other trading platform, and it spits out this journal, as well as some other nifty kind of metrics and charts and all that kind of stuff, right? So what I wanted to show you was basically, not this, calendar. So I went to Sim back on the 25th of July. So the first couple of days, I didn't trade on that day. The first couple of days, you know, no problem at all. Then the following week, also very good, excellent. I didn't trade these days because I think I was preparing to move and I was just packing stuff and I just didn't get a chance to do it. But, you know, look, these 2 weeks, you know, pretty good. Now, third week, right, this week, max losses. Now, my maximum loss, now I'm in Sim. My maximum loss, and I've got risk controls built in DAS. So let me show you what I mean. If you click on margin demo or your margin account, you've got something called open risk control page. Now this thing is a godsend, right? Here you can basically put down your max loss, how much you want, you know, your warnings, if you wanted to kind of stop your trading if you reach a maximum loss. So for example here, if you have a maximum unrealized of say $200, it will close your position. It won't allow you to trade anymore on that day. So my max net loss in Sim is 600. In live, it's 300. So that's why this today and yesterday got a bit out of hand, because the maximum loss was a bit higher than what I'm used to. Now, what this means is that if you hit your max loss, what happens is that DAS closes your positions out within 90 seconds automatically. So if you're in 4 trades, for example, and 3 are green, but the 4th one is the one that ripped you, these 3 trades, it will close as well within 90 seconds. Yeah. Now, I've said it like that because I need to have that kind of hardcore stop. You know, I trust myself, but I don't trust myself that much because I know what my weaknesses are, and this is one of my weaknesses. So yesterday, one trade caused this. Let me show you my snapshot for yesterday. All right. So basically, I had a massive loss because what did I do on this? I didn't check the ATR, and this was on a trade, and I can actually show you. ONCE, right? There you go. I didn't check the ATR of the stock. Now this was, it's got an ATR of $4, which means that this thing, you know, oscillates $4 a day. Now, you know, this kind of keeps popping up, guys. I averaged up again. You know, I stopped doing this, and I've forgot for some reason I've started doing it again. Now, I know it says only this was any bad trade, but this is the one that really kind of killed me. Now, the other thing I did was I used the 15-minute chart to enter the trade. I didn't look at the 1 or the 5-minute. This is where I got in. Now, it did break slightly, yeah, if you want to call this 51.25, and I got in 52.50. So, you know, it did break $1.25. In other words, I would have made some good money on this, but once again, averaging up or averaging down. So this is what cost me yesterday. But without this trade yesterday, you know, a fantastic, really good day, because when I worked out my net P&L, it would have been $900. Actually, this is the previous day as well. But the point is, you have to be careful with what you're doing. Yeah. Anyway, rambled on enough. Very happy to be in the new place. I'm getting better. I'm not too concerned at the moment regarding this, because it's all about the process. And yes, I'm making mistakes, but guess what? Whereas in the live trading, you know, going back a month and 2 months back, I was making mistakes in almost every trade I was in, bar the odd exception. This time, it's the reverse. I'm making 1 or 2 freaking horrible trades, and they're freaking looking horrible on my P&L, granted, but the others are pretty damn good. So what this means is that I'm getting better. Yeah, it looks pretty shitty when it comes to the P&L, but it's not about the P&L at this stage. It's about eradicating the errors. Anyway, I know this is going to sound really weird, but I'm actually happy with how I've been trading the last 2.5, 3 weeks, because I can see progress, and that's all you can ask for. You know, I feel like I'm on the cusp of it. You know, I really do. Anyway, I'll let you guys go. I hope you have a great rest of the day, and I shall speak to you tomorrow. Cheers, guys. Bye.